for such a great turnout. You will be glad to hear this isn't the programmable compliance session, but I'm sure it's worth sticking around for that later. What we wanted to do to kick things off today, being day one and the first session of the day, in a world where a lot of the concepts we talk about are very theoretical and abstract, we want to share with you real-world implementation stories and feedback. So I'm joined here with an expert panel from Franklin Templeton, UBS, and Alta Exchange, all of whom have implemented tokenized solutions across a variety of different asset classes. I'll pass over to the panel to introduce themselves. And what we will do is we'll jump in with a question to each panelist so they can share about their direct experiences, while you guys in the audience are able to submit questions online, and then we'll debate them as a panel ourselves. So Stephanie, I'll start with you. Would you like to give a quick introduction?
Sure. Hi, I'm Stephanie, and I'm Head of Products at UBS Asset Management. So over the past 3 years, I've had the opportunity to work closely on our tokenization efforts, also piloting our tokenized VCC last year to a full launch this year. So looking forward to share my insights from the experience, and also to discuss how tokenization can transform our asset management industry. Thanks.
Hi everyone, I'm Khai, co-founder and CIO of Alta Exchange. I'm the only marketplace player here because I think all of them here are asset managers. I run Alta, which is a marketplace for alternative investments. Our mission is actually to create access and liquidity within the odds space. We offer market participants to buy and sell odds products, including SpaceX shares, OpenAI shares, to tokenized whiskey wine products. We are headquartered here, licensed in Singapore and Malaysia, and happy to be here to share about my tokenization journey since when we first started the company. We are not blockchain enabled.
Good afternoon, everyone. I'm Chetan Karkhanis, SVP at Franklin Templeton Strategic Ventures. We're looking at all aspects of digital innovation, including the digital asset space. And in Singapore, we're part of the Project Guardian initiative, where we have already launched a tokenized money market fund in the US under the 40 Act. And that I'll be speaking a little bit about our experience there and how we see the world of tokenization unfolding. Happy to be part of this very charming group of panelists.
Excellent. So we'll start with you, Chetan. So I think throughout 2024, a key buzzword in the DLT and tokenization space has been interoperability. Do you think that is actually just a buzzword or a hype mentality, or is there actually some core requirements that we need to achieve or embed to achieve interoperability? Especially when you look at the Benji token that Franklin Templeton have launched across multiple chains, has that in essence achieved interoperability, or is there more to go on that point?
Yeah, that's a great question to start off with. And I think the reason we are here at that level of asking this question is because the world of decentralization is still very nascent. We're still in version 1.0 of these different standards, protocols, chains, layer 1, layer 2 applications. And just for reference, for example, you know, the Benji token, we started off in 2019 with the SEC working on making sure there was an on-chain product, and we started with the Stellar network. And if anyone's familiar with the Stellar network, you can generally process a trade on the Stellar network for about 0.000006. Sorry, that's 5 zeros and a 6 at the end of $1, compared to what a traditional transfer agent trade costs at about $1. So there were clearly efficiencies, but even that is one protocol among several. We're now on 8 chains. And I think even before we get to the chain layer, there's a fundamental question when people talk about tokenization is, are we talking about a private chain or a public blockchain? And our philosophical view right from the start has very much been that the benefits of decentralization really accrue to understanding the fundamental benefits of a public chain versus keeping it as a private chain in-house. So I think that's a base foundational layer. And then on top of that, you have to understand how to work with these different chains and what the benefits of each are from a security, efficiency, gas fees, other features that might be accrued to each chain. So from an industry standpoint, perhaps the end client doesn't necessarily see the immediate benefits of all these interoperability standards. But from a practitioner standpoint, I think it's important that we, from a technical angle, can operate with EVM, non-EVM, a whole level of different chains and protocols. Much like in the early days of the internet, we were working with different browsers, operating systems, and standards and the like. So I think it's an exciting part, to be honest, to be solving for these kinds of challenges.
Thank you. And I think that if I take nothing else away from today, the fact that you can move from a processing cost of $1 to 0.000006 is potentially transformative. And I think that's actually a good lead-in for Khai. From an exchange perspective, often a lot of the benefits we hear related to tokenization are quite generic. Lower costs, faster processing, democratization, etc. These are quite hard to basically to be tangible for people. You've worked with Philips Securities, Hamilton Lane, even UBS on tokenization products. Can you share any insights into the real-world benefits that this has delivered, or the real-world problems that it's solving for?
Yeah. I think just a bit of a background, because I focus mainly in the alt space, which is anything in the unlisted space. Historically, alternative is a small fraction of the entire capital markets, but it has set to grow in the last 20 years. Allocation to alts have grown a fair bit in the US. Endowments allocating 50% of their portfolio to alternative, whereas in Asia, we're looking at 5 or less. With that backdrop, I think where we first started is really trying to solve for access and liquidity within the alternative. One is access, which is fractionalization, which I think blockchain can easily provide that benefit. But when we first started, you can just fractionalize it and sell it to your customer in a non-blockchain manner. So that's not where I feel blockchain would actually yield the benefit that we're seeing from a mid to long-term perspective. It only comes down when we started trading this asset. Then when we realized that, okay, when we were trading Grab and Gojek shares then, which is like, at that point they were unlisted in 2019, actually took about 3 months to settle. And that settlement timeline is very long. And we're like, okay, if we can trade the products in 3 months, because you have to find a matched order, and then you have to actually do cap table transfer. A lot of things can change. If any price movement change, the buyer can fall out, the seller can just walk away from the deal. And in that context, that's when we turned to tokenization. Went to MES Sandbox and came out of the sandbox with a license where we actually brought down settlement time to T up to 7 days. And the business model have also changed to a more B2B to C business model, because there's higher likelihood of us finding a match order because you can't solve liquidity alone. And on that context itself, if you look at benefits, I'm a big proponent that you shouldn't change anything that's not broken, which is why from tokenization, I think from day one onwards, the big focus has been about commercialization. I almost want to laugh because if anything, from the day one till now, we have never done a POC. So every project we have done is like a real test case commercial project. Okay, well, it's not a project, but a business. And on that end, in art space, because there's no existing infrastructure, that's where adoption can actually take place faster. And I think a lot of banks we have seen where I talk about, I'm sorry, cost savings and so on and so forth. The assumption is that if you look into the footnote, the start to end has to be all on-chain. But right now is where do we get from here to be everyone to be on-chain, right? And I think that's the part that I think this panel will be more than willing to share in terms of how do we drive adoption and real life case scenario in terms of how that will take place over the next 5 years.
Excellent, thank you. And I think that actually leads really nicely, Stephanie, to a question for you, which is related to that digital transformation, that digitalization journey that we're on. It's day one of Singapore FinTech Festival. Hopefully, we're beyond day one of this journey, but we're probably still in the relative early days. You guys have tokenized, or UBS have tokenized an EVCC. We are seeing frameworks and technical standards emerge, and we're seeing some regulatory clearance, but also still quite a lot of opaqueness. What do you think are the biggest enablers and catalysts that would be needed to help us accelerate that journey?
So speaking from a traditional asset manager's perspective, so I would say the 3 main enablers would be regulations, need that to be clear, regulatory clarity, robust infrastructure, and also increasing market demand. So for us, regulations, I think that's That's number one. And that's the reason why, when we started our journey, we engaged the regulators really, really early on, especially with this fast-moving space in tokenization. For traditional asset managers to take the leap forward into this space, we need a lot of engagement with the regulators. And we started our journey 3 years ago, looking to see what would be a suitable vehicle. And that's when we started talking to the MES before they announced their Project Guardian, and trying to understand how would we bring this into a VCC framework. I think secondly also it's infrastructure. I think that's important, especially for traditional asset managers like us. It's very important that we have secure, reliable infrastructure, especially those that can handle institutional transaction volumes. And that's why for us, we have leveraged our own in-house tokenization platform, UBS Tokenized, that will provide the end-to-end tokenization capabilities. And then, and most importantly, it's safe and it's connected to our existing systems. And thirdly would be market demand. I mean, the thing is that it's not just about the institutions, fund managers that are tokenizing. It's also, a lot of it depends on investor demand. And without that, there's no point doing it. There's commercialization. I think how successful that is depends on whether investors understand, do they need this product, and how do we also better educate the investors why they should be switching from a normal fund format to a tokenized format. What is it for them? I think with these three things, this will be key catalysts to, bring transformation to the asset management industry. Yeah.
Excellent, thank you. I would encourage, oh great, we've got a couple of questions coming through. I would encourage people to continue sending them in. And maybe now just open it up to more of a bit of a discussion. I totally agree with your point around demand. And not to put anybody on the spot, but I wonder if each panelist could speak to the most impressive thing they've seen happening in the industry this year, in 2024, that has happened outside of your organization. And I'm happy to go first because demand is what triggered the question for me. I personally was very impressed with the level of demand for the Bitcoin and Ethereum ETFs when they were approved. So I think, that shows when market demand is there, products and solutions will follow and regulatory clarity should come as well. So perhaps start, Chetan, with yourself.
Yeah, I was going to add to that. I think the most impressive from my standpoint has been the growth in stablecoins, which have now reached about 200 plus billion of assets. Tokenized money market funds are still about under 2 billion. So we have a long surface to scratch. But stablecoins, and I think it goes to a bit what Steph said, the adoption in this space will be driven by a investor demand, and I mean retail investor demand. I think you can only go so far with a accredited investor base. It has to be broader retail and even beyond the Web3 savvy investors. But secondly, the use cases of tokenized products. So today we're thinking about, okay, you've got a illiquid asset, a building, a crate of wine, a money market fund. You can tokenize it. The infrastructure exists, the technology exists. But how do you get that in the hands of an investor to be able to holistically look at that portfolio and be able to do portfolio construction, optimization, and then also use things like stable coins to do payments and to do collateral management or other use cases. So I think that's where the industry is shifting towards. We're not quite there yet, but the most impressive thing I've seen from a statistic is 200 billion is still a drop in the bucket of a larger 6 trillion. And actually, there's 30 billion of global market value in payments transacting every day. So within the context of that, there's the big play to be made with tokenization.
And I think that links well to the infrastructure point. When we get this infrastructure in place, it hopefully will be easier to scale the solutions on top. And perhaps Khai, Steph, if you guys have any standout moments from 2024 as well, or conversely, what's the biggest disappointment you've seen this year?
Must it be outside your organization?
Yeah, that's the challenge.
It's very challenging.
I think it's difficult because I feel like for us, a lot of the big wins in the market, for me at least, I don't think anyone has done it outside of what we've done. Just a side.
Go ahead then, sure. Yeah. No. That's good, but that's a good caveat.
Because, like,
That's
for
fair.
instance, we also listed one of the largest insurance company, income insurance on our exchange, the only RMO or private exchange in Singapore that allow a liquidity mechanism for 16,000 retail shareholders to liquidate their shares. And this is, I suppose from a global perspective, I also have not heard anyone that have done to that same level. Second is that, I mean, the project that we got admitted for Project Guardian is actually a tokenized private credit fund, where we actually originally from a non-tokenized perspective, it's a monthly redemption product. It's listed on my exchange. We seldom list funds because of capital cost structures and so on and so forth. It's very complicated to actually trade PE funds because of the nature of it. For this specific fund, it's a private credit fund where it's fully paid up at start. It's monthly redemption, but we provide daily liquidity, and we've seen some trades on our exchange already. And we kind of transform it to a more like a treasury product for actually the corporates to actually increase their yield on their cash. And the part 2 of the project is actually we're launching our first Sharia-compliant tokenized fund. I dare say it's the first, which is why we got admitted to Project Guardian. So this too will be, I think, one of the key highlights for us at Alta. And looking forward to next year's pipeline.
And actually, if it's okay just to maybe build on that, we've got a couple of questions that have come through specifically for Alta around the liquidity of alternatives. And I think they both echo back to, you know, the very true fact that tokenizing an asset doesn't just magically provide liquidity. So questions around how does the exchange address liquidity concerns on alternative investments, particularly where historically they've had poor liquidity?
I think poor liquidity is all relative. If you look at the market cap of SpaceX, it's actually a 500 billion market cap company. So there's no doubt there's already liquidity inside, but just that the liquidity is not pooled in a single marketplace, and that's where we operate, so that we can actually pool the liquidity, so that one day if you want to buy or sell, you can do that easily. And it's all relative from a market cap perspective. So on our exchange, we have about 70 assets listed. Not all are as big as SpaceX. Obviously, for income, it's about 3 to 4 billion market cap company. And on that end, we actually engage research reports. We actually have market makers against the counter to provide that. And always looking for more liquidity provider if anyone would like to partner with us.
And there's a question here as well, so thank you for sending them in, that I think builds on your point around infrastructure, Stephanie. It's basically saying, is there a correlation between the growing maturity of digital payments and tokenization? Do you think that there's a dependency on more digital payment rails for tokenization to truly take off?
Definitely. Right now, you know, a lot of the fund that the tokenized fund that we just launched, we still have to rely on fiat payments, and you know, the whole process can achieve its full operational efficiencies if the entire payment to the end-to-end is efficient, and that would also require digital payment rails to be set up. And I think at this moment, a lot of questions around like regulated stablecoin. I think it's something that we definitely would want to see, you know, regulations improve, some clarity around that, and then how we can, you know, for asset management like ourselves, and how we can actually take in USDCs or stable coins. I think that would be a game changer for the asset management industry.
So if I could just add to that, because it's also a question of the maturity of the regulations and the licensing regimes. You know, for example, we can provide a USDC to fiat to Benji on-ramp and off-ramp for those who are interested in just moving their tokens from crypto into a yield-bearing token, right? One's a stable coin, one's a yield-bearing token. But in effect, the only difference between the two is one pays out the interest, the other keeps the interest. So it's a regulatory question as well as, it's not so much an infrastructure or technology question, to be honest. Where the lines blur is what is considered a security and a regulated investment product versus what should be covered under the digital payments license or a major payment institution license, and how are the two going to interchange?
Maybe I can add a little bit on that as well. So I think on the correlation, at least for odd space, given that payments settlement time from T up to 3 months to 7 days, it's really a very big improvement from increasing liquidity, because you can solve, like, there are other problems to solve in terms of like having more market participant versus like payment timing. For us, it's not a priority right now because, of course, we can actually do atomic settlement instantaneously for our exchange. But the crux of the problem right now is really more focusing on adoption. How do you increase more market participants within our marketplace rather than trying to reduce T up to 7 days settlement to T plus 0 seconds. So that's of a different view from our end, specifically to the alternative asset industry.
And I think we're coming to the closing minutes, but just building on Chetan's point around the classification of tokens, that's something that I think everybody in this space has come up against throughout their journeys. Right now, tokens often have to be linked back to a traditional asset class, and therefore you have to navigate the rules, regulations, and stipulations of that asset class. A report was published today by the Project Guardian Asset and Wealth Management Group in conjunction with the MAS and the FCA, which specifically outlines a framework that we're calling composable finance. And the essence of that framework is how we need to look at tokens in isolation from existing infrastructure, existing regulation, existing solutions, and how we can move towards a more modular and composable solution where you don't necessarily have to classify and bridge everything back to how the ecosystem works today. I would encourage people to download that report. It's available on the Project Guardian website, and it speaks to some of the key points that we've discussed here today. We only have a few minutes left, and I guess just a quick question. We live in an environment where there's a lot of competing priorities. How would we make sure this stays top of mind throughout 2025? And what do you think should be some of the key deliverables or points of clarity that are delivered in 2025? And I'll ask each panelist to have less than a minute on each of that, please.
Let me go. Okay, I'll keep it short, but I think I was discussing this earlier with Steph as well, who's also from another asset manager. Look, I think it's about the infrastructure's there, the technology's there. We've been building the proof of concept. We have launched. Now it's about scale. And I think from an organizational perspective, it's to drive the scale in the digital asset space. And ultimately, it is about the end client and how they benefit. So making sure the end investor and intermediaries understand the value proposition of tokenization. That'll require some education as well. And bringing out the message around what benefits do you have from an on-chain product, like, for example, in our case, Benji, and what kind of things can you do with it in the coming year and years to come.
For me, just to add on Chetan's point, I agree. You can tokenize everything in the world, because like we even tokenize whiskey and wine. But I think from a priority perspective, or prioritization perspective, I do think that it's time to look at which part of the focus on infrastructure, focus on customers or pockets of industry that's not which is underserved right now, and where tokenization can solve the inherent problem. And where I am is on the private space, but I'm sure that there are other parts of the markets where, for instance, they're underbanked, and therefore stablecoin or CBDC would come in more useful, just like how mobile payments or have overtaken Africa versus like other parts of the world. When there's lack of infrastructure, it's easier to penetrate versus like there's already an existing infrastructure and you're trying to replace it. I think the focus should be working on the first and not the second from a prioritization perspective, and that's where I personally see bigger adoption or more adoption of tokenization as a technology. And looking forward to actually speak to anyone who's interested in tokenizing assets within the art space, because happy to actually add more market participants within our exchange. Yeah.
Maybe just quickly to add, I think we're running out of time. I think for us, it's important that even though there's lots of competing priorities, that we still, focus on tokenization, digitalization. This is a core strategy for UBS, and we continue to progress beyond our launch, hoping to expand to other investment strategies and also to broaden our distribution reach.
Excellent, so watch this space. Look, thanks everyone in the audience. We've got 10 questions through. We only got through half of them, so apologies for not being able to cover all of them. But that was a great start to the technology stage, and we hope that you can continue to join everyone throughout this afternoon. And a big thank you to our panelists as well.